Hello everyone, welcome to LearnStocks101.com. It's our free market video. It's Thursday, August 7th, 2014. We got a really tough market right here, as I've been talking about over days and days and days. And we're going to talk about some spreads again in this video, some message I sent out to my members, and I'll show you how I like to put on spreads at the end. So what I'm looking at on the SPY here is, the bulls are putting up a pretty darn good fight right here at this 100 simple. Okay, but to put on the Bollinger Band studies here, the market actually came back inside the Bollinger Bands today. So again, this is something that still might have some more downside because nothing is really extended to the downside. The Qs right here, not really extended. IWM back inside the Bollinger Band. So this is what I talked about not chasing last night. If you're still short things or short this market, I don't think it's extended to the downside. It is having some violent moves still intraday. But again, still could revert to the mean a little bit more on the IWM and things like that. To the Qs, a little bit more room up and still on the SPY, so still some more room to the upside. But as I said on the regular chart with the moving averages, the bulls are putting up a pretty good fight here at the 100-day simple moving average. But we did close the lows today, at or near the lows with a lot of volume. So again, this 100-day moving average is going to be a very tough or be a very critical point because you can see even if I put a 2-year chart up here on the SPY, when the 100 days started to roll up, so we started to break out a little bit more. We've had some bouts below the 100-day moving average, but every retest of that moving average has been bought. So in other words, even if we zoom back to this almost 2 years ago, we made a pretty significant move below that 100-day moving average, but when we went back up and tested it, we went back above it. So that's going to be your key. This is longer term. That's going to be your key to watch to see if this is going to get uglier than it has been over the last 2 years. Because over the last 2 years, we've been used to one thing and one thing only. Just riding, maybe pulling back to this level, having a little bit of headache in our life for a bull, but having it just bounce here and go on its merry way, even though it might dip a little bit below. So that's what you need to watch. You need to watch if it goes below in the retest. We got some volume here. Every single time that it's done this, this is what the market has looked like and felt like. So this is not anything different. But like I said before, every time we've made this move, it's been a very difficult time to get to swing trade, to get into things to hold because of the violent moves. You got to have some pretty good conviction. So short-term trading, based on what this market is doing, again, is one of the ways to go right here, and spreads is the other way to go. Short-term trading over a day or two, is a pretty good idea. But also, if you're not doing options, also stock is not a bad idea either. But all the setups are looking kind of bearish right now. And so when I go over the setups and I go over, they're not all going to be bearish, but that's the way things are looking, the way this is. So this is a critical point right here in the markets right here. And then if we get below, we'll have to see what happens. Again, short term, this looks like it wants to go lower because it's not overextended. We'll have to see tomorrow. This is not a place where I want to make a bet either long or short side. I actually told my members today, with a lot of more short, trim some off the top because again, if you still have winners, you can let them run tomorrow, then or you at least book some profit. So again, short term, SPY holding that 100-day, so the bulls are putting up a pretty good fight. The Qs are still holding that support level. You can see that's a little bit of a hodgepodge over the last 6 months on the Qs, so they can really go down a little bit. But again, the indicators show all that the bears are in control, like you would expect. And like I said, the IWM could come back up and test its 21 EMA, but it's again still in a downtrend. The big tell right here is bonds about to break out to 52-week highs. Actually, possibly not 2-year highs. So yeah, 1-year highs is what we're looking at in bonds. This is the 1-year chart of the bonds. I'm actually long TLT, and I'm looking for a 117.31 target on my 116 September calls. So that's what I'm looking for in bonds. Now, the other thing I want to show you on the squeeze charts is that if you look at the SPY on a weekly with the momentum indicators that I have over here, you can see we had a squeeze that had fired long of about 10 weeks ago. You see what's that? 1, 2, 3, 6, maybe 12 weeks ago. So that gave us the momentum to the upside when the Bollinger Bands broke out of the Keltner channels. Now that momentum is starting to wane. And you see we're crossing and closing below the 21 EMA on the weekly. So this is a very good test for the market to see if we hold that as we have in the past on the weekly. So a weekly chart is a good one to watch as well. If we roll back to the daily chart, we can see that is in a squeeze that has fired short, but is about 6 days into that fire short. So again, we have about 2 days left on that downside. That's why I think there's still some more downside in the short term. So again, it's really at a critical point in the markets right now. If you're long, I think you need to be hedged. If you're short, I still think you need to be careful, because you have to be long the stocks that don't care and short the stocks that are bearish. Just because if the market's going to go lower doesn't mean you can be short everything. Netflix is a great example of that today. But it's just one of those things where we're pointing out that if the SPY breaks down through this 100-day moving average, that's going to be some violent swings both up and down in the market. Some moves down, some short covering rallies, and then we'll see what goes from there. So it's very important that you pick the stocks and know the levels of the stocks that you're trading. So Netflix is one request I got tonight. So where could this go? So that was very strong today. So again, like I said, in the market like we have right now, things can move to the upside. And Netflix is a tough swing trade right now because it's moved off that 432 level that I said. I kept saying that I don't know if I wanted to short it or go long because it was banging up against this trend line, so not going any higher, but again, also not going any lower. So today with some news out, it decided to go a little bit higher. So I'm looking for a little price resistance right around about 455. And then if that doesn't hold as resistance, we're looking for 466, and then the most recent high is at about 472. So this could have some more room to the upside. You just got to be very careful because of the move that it made today, sort of like Priceline the other day. Twitter, I got a request on Twitter. So Twitter's in a precarious situation right here. Again, when you get a big gap like we have in Twitter, the huge gap up here from this high of 38.92, so call it 39, to the low of 45.65. So that's about a $6.50 gap. So usually when you get that much of a gap on a $40 stock and on a stock of this low price, usually before you're not going to fill the whole gap right away, because whenever I get a gap play, I always tell my members, watch the low of the gap. If it gets below there, that's a bearish trade trying to fill the gap, because they all want to go long in that situation. But when you have a huge gap like this, you look at the half a gap fill. So if it holds here, this could be a long back up to the highs of 48. If it breaks through 43, okay, you could have another, what's that, $3 down here. Again, the half a gap fill, $3 back down to 38.92. So that's a trade either direction right there. We just have to see where this holds up at, and I think it's market contingent. Solar City, I got a request on levels. Solar is one of those ones that First Solar is well reported well the other night. The solar stocks don't really care what the market's doing. So solar stocks are not a bad place to be long right now. However, this might become a chase in the morning since it just reported earnings. And I get a lot of requests on stocks just reported earnings just because the levels that I give are so good. So right now it's trading at about right here, about 79. So we don't know where that's going to open tomorrow. It's actually trading closer to 80. Right now at about 6:02 Eastern time, so 2 hours left in trading. So again, we have to see where this gaps up tomorrow. I like playing the bottom of a gap in a situation like this for a run up to the first target at 84.21. So targets on this one are 84.21 and 94.57 based on that swing right there. So we had a swing, came down and tested support that I had tagged to 62.50, and then it's making its move up on the earnings play. I think it still has more room to run, but the 5-minute bar is always a good handle. There can be a 5-minute bar, 10-minute bar. I'll actually put a 10-minute bar up here. So you let the stock trade for a little bit. Once you get above that 10-minute bar, you can go long with a stop at the low of that bar, and then you let it run. Again, that's a good rule of thumb. Again, 5-minute bar, 10-minute bar. Some people even use a 1-minute bar because they're a little bit quicker. So Solar City targets 84.21, 94.57. We'll see where it opens tomorrow morning. This is my favorite short right now, Pier 1 Imports, because it's not a pretty chart no matter what the market's been doing. If you look at a year chart, not pretty in any way, shape, or form. So there's no options on this stock that I would trade. So I would just see if there's shares short. Put your stop if you want it tight at the 21 EMA if you just want to get out if it breaks out, which is about 1530. If you think it's just not really going to go up anytime in the near future, you put your stop a little bit looser at 1583. Your first target is $14 to the downside. If I pull up a 9-month chart, you'll see your second target at 1281. This is, again, one that's getting its butt kicked. Will it continue to? I'm not sure, but it certainly has done that over the last. I mean, the only time it's made a decent move is either on news or on earnings reports. And again, it's just a matter of what kind of risk you want to put on in that trade. Now, the last one, I did get a request on Apple. So 92.57. Apple is not something I want to short here. It's something I want to look for long entries because Apple is hanging in there with the market. Even if the market goes down, I'm just looking for buy points. And I'm looking for support level 92.57 here. I'm also looking to see if we can close over this 21 EMA and get the ball rolling back to the upside again. So again, it was extended before, but now it's coming back to support. And this 92.57 level is right at that 55 EMA as well. So this is a good level to watch. If it breaks that level, we're looking for a buy point somewhere in the area of about 89.21. Again, looking for buy points on Apple. I think this goes higher, but you just got to watch how the market circumstances handle it. So my members, like I said, we've been talking a lot about spreads because this market is so tough to trade directionally right now. Just let me give you, I sent them out 4 spreads to get into this afternoon. Let me give you 2 of them, and that'll give you an idea how I work these. I get a lot of questions on this since I've been covering this a lot lately. And I liked Amazon and Google. Because when you do a spread, like I think I showed you before, you want to be safe, you want to be at least 1 standard deviation of the move. And what I mean by that is if you go to the Analyze tab, I think I have Amazon up right now. The expected move, earlier today was about $4.50. So I like to put my trades on based on the expected move and where resistance is. So we know resistance is clearly at 315. So we had a 30-cent credit we could have got on. If anybody, when we put on the trade, it was a 30-cent credit when I put it out there at the 317.5, 322.5 bear credit spread. So we're selling the call credit spread, bear call credit spread. It's 317.5. So all that need to do is stay below 317.5, which is giving you a little room above 315, and also giving you more than 1 standard deviation move where it was trading at about 312 at the time. So that puts us at about a little over $5 at that move. So that was comfortable with that. The other one we put out there, again, we put out 4. Was the other one I liked was Google, and that was at 582.5, 587.5, which was clearly above the 578 level, and even above this high I put on that day, and that was another 30-cent credit. Remember, as I showed you the other night, when you look at the risk profile on a credit spread, you sometimes think you're crazy because you're risking about $400 usually to make 30, or depending on what it is at that time, per contract. But what you're doing in these situations is putting the odds in your favor. And I'm getting so many questions on this, and I'm actually getting booked on my private mentorship program because you can go through a lot of options training, watch a lot of videos and things like that, but it's always good when you have somebody that really knows what they're doing and they can walk you through things. You understand it a lot quicker. So this is booking up. So again, I've been asked, not to clarify anything. I'm just showing you the private mentorship page, which is right here, and under options mentoring, it's the same page you'll go to. You request enrollment in the private mentorship program. We'll talk about what we're going to, we don't really just jump into it. We put a lesson plan together and talk about how we're going to handle the hours that we're going to be on GoToMeeting at. So this is booking up. So if anybody else wants in, the calendar is moving. Just wanted to throw that out there because this is the options is the tough part to get a hold of. I mean, stocks are easy. It's either you buy or you're shorting it, and you know where it's going. But options, you have so many strikes, so many different options on spreads that you can do: debit spreads, credit spreads, iron condors, butterflies, all kinds of stuff. So it's a good tool. It's a good tool to put in your arsenal, even though that's not, if that might not be the only way you're going to trade. So keep the questions coming on the contact form, and I'll keep answering them.